I lost $9 on this trade. When I first saw it, the 1 hour bar, bounced right from its open. It was 4 a.m. bar. It bounced right from its open. It bounced from the support. It was quite a strong bounce. Then it went down, and when I saw it, there was a little bit of green between the level where I saw it and the level of support. I did not take this trade, and initially I was not aware why. I even wrote myself a little story how I missed a great trade. But later I realized of my resistance to entering this position was most likely due to something I was not really conscious at the time. It was most likely unconscious awareness that I was too far from Emma, but I was at the level of the bounce from support, the red line, and possibly my subconscious awareness was also aware of the head and shoulders pattern, which I should wait to let it fulfill. And I think that's the whole story here. This trade, the story which I'm describing here, points to the necessity, my necessity, of waiting for the historical Emma bounce, no matter what else is there, no matter whether there is a break. And actually, this trade would have been a break, and I don't trade breaks. This would have been a break of range, trading range. So the whole idea of entering at that level when I first saw it would have been wrong. And perhaps that's what my subconscious awareness did in terms of me not taking this trade. Later, as I've already said it, later I thought, I have missed a great trade. Actually, there was a very nice profit made on that break, but I don't trade breaks. I need to have very solid rules, otherwise I don't know what to do. I think this completes my description of what happened here. I actually need to say more about this trade. So far, I've just spoken about why I did not enter my initial trade idea. But then after I saw that this fake out showed a bounce from the former support and now the resistance level, the red line, I just let myself be tempted by the devil on my shoulder, and I entered a short against my rules. There was no bounce of Emma, and I also disregarded the need to wait for the head and shoulders pattern to fulfill itself. And consequently, I lost $9 here. And again, this entry, which was done totally against my rules, points to the absolute necessity for me to wait for the historical EMA bounces and waiting for head and shoulders patterns to fulfill themselves. They tend to fulfill themselves very, very often. This image shows an almost identical scenario which I experienced, which I went through 2 days ago. It was in the US, USD CHF, it was Canadian dollar versus CHF. And it was also a trading range. There was a very strong line of support that was broken, and I thought that after the break reversed to the support, which now became a resistance, and started going down, I thought that would be a great idea to enter. The black line shows my enter. However, as in the first case, the case of USD, CHF, this break was just a fake out. It wasn't very deep. It reversed, and it could have possibly bounced of EMA 20, the historical bounce of EMA 20, but all of a sudden, a huge surge happened driven by the motherfucker Trump flipping from I'm going to impose tariffs immediately to no, I'm not going to impose them immediately. And the market went nuts. That's how I lost quite a bit of money here. But other than that, this case is also a case study for do not enter breaks of trending ranges which look like they are gonna fall. They're gonna make a great short. But these are deceptions. I think in a lot of cases these are deceptions. So again, I have to say that I absolutely must wait for the historical bounce of EMA, most often 20, EMA 20, sometimes EMA 50, and also respect the so very frequently appearing head and shoulders pattern. These patterns tend to fulfill themselves, and I need to observe that, pay attention to that, and don't be fooled by the breaks which happen under conditions such as can be seen on this image. I need to add a message to myself, a message in addition to what I've already said. So this image shows my today's trade, January 22, 2025. And when I first saw the trade potential, or when I thought it was a trade potential, there was a very prominent diversion here. The image does not show it anymore because of the fall of the price action. But before that fall happened, there was a prominent diversion here, and I think that I was conscious of it, and I think that was also a deterrent for me in terms of not entering this trade. And now I want to show the trade which I took a very similar price action pattern. This time a Canadian CHF rather than USD CHF, and this trade happened on January the 20th, 2025. And here I entered against a very visible diversion, which, in addition to everything that I said before, is another sin. It's obvious I'm entering against the diversion here, and I guess that would complete the whole story.